Hi, everyone. Welcome to another stream in which we'll be discussing some of the trends that have been happening in the blockchain and crypto world. As you can see from my background, I am still in a tropical weather country, um, but let's jump right into it. So, one of the latest trends that we've seen in the crypto and blockchain world this month, or as of this month of 2025, go all the way from the tokenization of real world assets to advancements in zero knowledge proofs and DeFi innovations. We have a lot to discuss. So, why don't we get started? Let's first maybe outline what are some of these trends that have been happening in the industry. The first one I would say is the tokenization of real world assets. We've seen that definitely take off, and there's a big growth coming from that sector. So, we'll discuss that. We'll also discuss the restaking and enhanced security models, which have also been a little bit of the talk of the town. And then we'll talk a little bit about modular blockchain architectures and the developments that we've seen in things like, as I mentioned, zero knowledge proofs and DeFis and DAOs. We've seen certain sectors that are outperforming and have really kind of driven the growth in the sector. And then we'll talk a little bit about some specific coins and projects and the latest developments in terms of regulation. Now, of course, as always, if any of you have any questions or if you'd like to discuss a specific topic, by all means, please let me know. Um, if not, we'll just go over those that I just mentioned. Starting with the tokenization of real world assets, this has really been one of the explosive trends that we've seen this year. It has really taken off. We've seen real estate, treasuries, and even gold being tokenized. What this is doing is allowing retail and institutional investors to participate mostly in fractional ownership. And so this increased liquidity and the broader access to previously, let's say, inaccessible markets are huge wins for the industry. So, really, we've seen a surge over the past week. The sector saw a surge of 260% in growth. As you can imagine, this is huge, right? We're almost tripling the size, two and a half times the size of what the industry was. And not only is this driven by increased tokenization of assets, but also because some of these tend to be, and most of these tend to be high value assets. And so, of course, when we look at it from a dollars and cents point of view, we've seen that growth. The other trend I mentioned in terms of restaking and enhanced security models, one of the things that we've seen on the security front is that restaking is gaining traction. And as you know, as DeepSafe, we work with restaking protocols that are on the Bitcoin blockchain by allowing them to perform their activities while having their stakers maintain custody of their assets. And of course, this reduces the risk enormously and helps a lot more, let's say, risk adverse participants play in the market. And so we're looking at institutional investors, we're looking at Bitcoin whales, we're looking at different players who now, through liquid restaking, can earn the additional rewards or passive income that assets earn multiple times across different networks. And so, with this growing adoption, the focus is not just on reward maximization, but also on creating shared security. And what I mean by this is shared security layers across chain, which is precisely what we do in DeepSafe. Um, in the case of Ethereum, for example, we've seen their restaking model rise almost 6% just this week. And that highlights the importance of that growth. So 6% of, or 5.8% to be more precise, of growth just in the Ethereum blockchain when it comes to restaking. Another topic I mentioned is modular blockchain architectures. And so what we've seen is that this is a sector that really is making waves by addressing scalability issues, right? So by having these kind of modular platforms or modular protocols that can actually integrate into other ones, we see new and more kind of evolved use cases, right? For example, we see Celestia, Polygon 2.0, Ingen layer, and and these are just a few projects that are becoming more and more efficient, more flexible, and more customizable. Um, and they offer streamlined operations for dApps, right? And so, looking at this modular architecture, I would say it's a big development for the industry in the sense of being able to stack different platforms or operations or functions and creating new and innovative business models. Another sector we've seen that has evolved considerably is zero knowledge proofs. As you know, zero knowledge proof is a way for a system to verify that a user has certain information or that the information is true without revealing what that information is. And so this is really one of the very strong advantages that we can see in blockchain in terms of not only um, protection of the data, but also in terms of security. And so zero knowledge proofs, have make things just faster, more secure, more private, and we've seen this particularly in layer two networks, where um, zero knowledge proofs is used to accelerate the transaction approval or transaction confirmation, as well as to maintain confidentiality and the integrity and security of the information. The next topic is DeFi and DAOs, which have also evolved considerably. In the side of DeFi, what we continue to see is more mature and evolved models, stronger cross-chain operations, which of course is something that at DeepSafe we do, is making sure that these cross-chain operations happen seamlessly and without any risk of loss when you're jumping from one blockchain to another, and then when you're jumping back. This, of course, allows a deeper integration with TradFi or traditional finance. On the DAO side, on the decentralized autonomous organization side, we have seen them playing a increasingly important role in governance. The DeFi space has become more versatile and institutional friendly. And it's clear that the evolution of DeFi is one of the most critical aspects that we're going to see in the crypto landscape going forward. There have been sector performance that have really driven the growth. So just to summarize the ones we just discussed, we have the real world asset tokenization protocols, which saw an explosive growth of 260%, in particularly driven by real world assets that have a high value. Liquidity restaking tokens have gained 6% just in the Ethereum blockchain. And of course, that's signaling the utility in DeFi that we see. As I mentioned, restaking gained a solid 5.8%. And we've seen layer twos and perpetual contracts with NFTs and yield farming also gaining momentum. As I mentioned, there are specific projects as well in which we've seen rallies. We've seen it, of course, in Bitcoin that we discussed last week and Ethereum, which remain dominant. But there have been significant rallies in Solana, Arbitrum, Avalanche, some of the strongest price movements this week we've seen from these currencies. The other important thing that we've seen comes in relation to, let's say, regulation or mass adoption. So we've seen that Tether, USA's stablecoin or US dollar stablecoin, um, Tether's USAT, a new US regulated stablecoin, is now live. And so this is marking a major shift in stablecoin regulation. NASDAQ is making also bold moves by filing for approval to offer tokenized equity securities. and ETPs. So this would pave the way for more blockchain integration into traditional markets. And this is something that's worth thinking about and discussing a bit further. Because if you think about it, once NASDAQ starts including tokenized equity securities, that is a very strong vote of confidence for the industry. And this drives to a lot more validation, which is something that we have seen um, as the industry evolves, of course, by having that or those, let's say, major players integrate um, Bitcoin, Ethereum, and other cryptocurrencies into their portfolio of ETFs. So that is also a trend to look out for. Um, I think it's going to really be one of the driving forces going forward. We have Remitix, which is a new altcoin with a focus on cross-border payments, which has also gained a lot of traction with the launch of a wallet supporting over 40 cryptocurrencies. And so this is an interesting project to keep an eye out for. These cross-border payments, of course, being one of the many kind of strong use cases for cryptocurrencies. And so their Remitix is paving the way, let's say, to make this a little bit easier, a little bit more seamless, and a little bit more, let's say, secure and integrated, facilitate the user interaction and the user experience. We've seen WorldCoin, which is continuing its iris scanning biometric identity verification system, which has raised both interesting um, concerns when it comes to privacy, but there is a lot of interest for this. Of course, having tokens that are connected or identified by using your iris or scanning your iris is controversial to say the least. But there are a lot of people that find this as a very valid and secure way to move forward with avoiding fraud and avoiding theft of tokens. So, with all these trends and developments, it's clear that crypto and blockchain as an industry are expanding and evolving rapidly. Tokenization, DeFi, privacy focused protocols, security innovations, all of these are contributing to a more mature, dynamic, and inclusive market. And I would say these are definitely trends to keep an eye out for. Um, if we look a little bit more at the evolution of the real world assets, we see that this is driven by more and more clarity in regulation. We see that, of course, after the Bitcoin's ETFs were approved, we saw a big move when it comes to that. And we have in the works ETFs for other coins like Ethereum and Solana. And so those, let's say, the approval of such ETFs would definitely be a strong driving force that would undoubtedly impact the market significantly. Can you imagine, just like Bitcoin, when you have institutional money coming into the system, there's a lot of it. And once that these institutional investors and, let's say, whale holders feel confident that they can actually buy these ETFs as a traditional finance instrument, or at least as a hybrid of TradFi and DeFi, we see this grow. And again, it's not just um, you know treasuries, or it's not just stocks, but we're seeing this in real estate predominantly. We've seen it in gold. So we're really starting to see a stronger use case and a more or wider adoption, let's say, of the tokenization of real world assets. This is very exciting for the industry because not only will it allow for fractional ownership on one end, but it will also allow for a more immediate and secure trading or sale and purchase of these tokenized assets. So it becomes a lot easier, to develop a smart contract in which the payment for the real world asset has to be made before, let's say, the real world asset token, or the token representing that real world asset, is transferred over. So think of it as blockchain being an escrow for the purchase of these real world assets. And again, the other very important development is the ability to fractionalize these assets. And we have seen this. We had early players like Mycenas coming on. This is a good 4 years ago. And I remember their first project was the tokenization of an Andy Warhol painting. And so, as you can imagine, there was a lot of interest um, because everybody kind of felt the aspirational and the excitement of yeah, the aspirational desire of owning even if a little piece of and an Andy Warhol, right? And they were quite successful at doing this. They keep doing it with fine art. There's also some platforms that have been doing real world asset tokenization when it comes to cars and collectible related to vehicles. And so there are quite a few examples of vehicles that have been tokenized. Now, of course, when we talk about fractional ownership, uh, for now we're talking about assets that wouldn't necessarily physically be with any of these owners. In some cases they might, in some cases they might not. But as you can imagine, having a or having fractional ownership of something like an Andy Warhol painting doesn't mean that this painting is going to be passed around between all the people that have um, part of this asset, right, or own a fraction of this asset. That would be not only impractical but extremely expensive in terms of shipping, but especially insurance, and as you can imagine, highly risky that the painting could get stolen, replaced by a fake, or anything like that. So, having a more robust real world asset tokenization um, scenario really is a very exciting improvement for the industry. It's something that we definitely um, look forward to continuing to grow. And in my opinion, this is going to be the future of trading. In fact, I think that because of the security that it represents to have a digital version of a physical good, um, the increased um, ease, let's say, of transfer, the increased security of having a recourse, the increased security of using encryption, all these things are beneficial. Now, it remains to be seen how the integration of this ownership transfer will be done in the real world. So if you own a house, it is registered under whatever government organization in each country manages ownership, and they will have, right, the records of who is the owner of what. And so when these assets change hands, when these assets are fractionalized and need to be registered, it remains to be seen how that will be done. Not only because it's likely that the asset owners will be in different geographies, but also because the asset itself might be in a different place. And so, let's say me as a Costa Rican citizen, if I buy, a fraction of an asset, let's say in Spain, um, then we have the question of, well, do I register here? Is it registered under my name there? Is it registered under all of the fractional owners? And once these fractions, let's say, or these ownerships change hands, how is that going to be done, right? And so there are still some questions that remain to be answered, but at least the evolution of a more robust portfolio of assets being tokenized leads us to a very kind of encouraging outlook for the industry itself. That is, I think, one of the most exciting developments. As I had mentioned in my previous stream, I'm also very excited about the clarity in terms of regulation that we're getting, and really understanding what's going to happen in the future, and having regulation around clarity around regulation really is what helps drive sustained growth, because it is very risky to build or develop something that you don't know how it's going to be regulated in the future. And so people tend to shy away from obviously these situations. That said, if it's clear, and you understand how whatever asset you're buying on a blockchain is going to be treated from a regulatory compliance standpoint, then obviously it's a lot easier for people and institutionals to plan how they will do this. So that is another one that to look out for in terms of regulation. As I mentioned, we have um, the European Union that came out with the MiCA regulation. We have the US that recently came out as well with regulation when it comes to stable coins. And of course, we have Hong Kong, which um, August 1st, I believe, had its stablecoin ordinance come into effect. So these are all developments that we need to keep an eye out for as we start heading towards the last quarter of the year, or the calendar year at least. We have to look at seasonal trends. There tends to be positive movements, particularly when we get to the holidays, and a lot of people increasingly are using cryptocurrencies to purchase things like Christmas gifts or holidays, or things that kind of uh, used to be big ticket items that usually were purchased with credit cards. And so this evolution allows us to have a more mainstream approach and to really incorporate the crypto world into the real world and kind of bridge that gap that exists, particularly when jumping from the real world or the traditional finance world to the decentralized finance world. As I mentioned, things like the registry, the physical registry of goods, things like how do you recognize fractional ownership if, let's say, the asset is in another place, as well as, of course, taxation that is related to if there were any capital gains when you dispose of the asset, or even if there's any appreciation of the asset itself. In some jurisdictions, that triggers a tax event. So hopefully we'll get more clarity around that, or increasing clarity around that. But it really is exciting to see that um, the market is becoming a lot more robust. And as I mentioned, it's not negligible. Just this past month, we saw a 260% growth when it comes to real world asset tokenization, and that was just on the Ethereum blockchain. So very excited about that. Looking forward to seeing how the rest of the year evolves when it comes to that, and how regulation is going to treat this, taxation is going to treat this, and cross border, of course, ownership, how that's going to be treated, particularly for fractional assets. So, with that, I'll let you guys have a great week. If you have any questions, of course, please don't hesitate to reach out to us. We're happy to answer them. And if you have any topics that you would like for me to discuss, by all means, drop us an email, write to us on our socials, and let us know what you'd like to be talking about. And so, with that, thank you, everyone. I'll see you in a couple of days, and I wish you all a good week.